Let's go across to David Madden, market analyst, CMC Markets. He's joining us now. There'll be an important development today. FOMC minutes is likely to come out today, and that's something which the entire globe, in terms of bond market, watches, and that will also, lead to equity reaction, FII reaction into various emerging markets. David, what to expect from the FOMC minutes? What will the market watch out for?
I think what the market's going to be watching out for is how hawkish the Federal Reserve were in their methodical process. excuse me, last month when they decided to hike rates, and most importantly, how many more interest rates rises we're going to see in 2018. Now, last month, when Jerome Powell, the head of the Federal Reserve, hiked rates, he also suggested we could see two more rate hikes in 2018, one in September and one in December. But he also talked about how he's heard some anecdotal evidence that the uncertainty around the trading situation in America in relation to the tariffs has dampened business investment. He was talking to CEOs and employers who stated they're a bit nervous about expanding their operations and taking on new staff because they don't know what's going on in relation to trade. Quite frankly, we still globally, all of us still don't really know when this trade spat is going to end. But it would appear to me that the Federal Reserve are pushing towards two more rate hikes in 2018, unless something drastic happens in relation to trade.
Right. Just in terms of crude prices being where they are, the data that is coming out from US, you think all of it is pointing out that Fed could be much more hawkish than what it has been earlier?
I don't think it's going to be much more hawkish than expected. I think if it's hawkish, I would say that would be reasonably well expected. But I don't foresee that the Federal Reserve coming out and being much more hawkish than what traders are currently pricing in. I think Jerome Powell was selected because he was a sort of a middle-of-the-road candidate, a neutral candidate in the Federal Reserve, not too dissimilar to Janet Yellen, and he's only been in the top job a number of months now, so I don't think he's going to be looking to kind of rock the boat anytime soon. He may spend a few more months, kind of, if you will, kind of shadowing how Janet Yellen finished up back in February. But I don't foresee any kind of sudden turns towards hawkishness or dovishness, for that matter.
Right. Just in terms of emerging markets outflow, what is the sense that you get? The FII outflow happening from emerging markets would continue?
Absolutely. In terms of economic uncertainty, it's going to be, we could see further funds flow into the US dollar, which not too long ago was at a multi-month high. I think that the fear factor in relation to trade, in particularly the United States and China, and the United States and Canada and the EU, I think that's going to continue to build, and all that time going along, we're probably likely to see traders look to kind of move away from emerging markets, emerging market products, and more towards more kind of not necessarily complete safe havens, but safer havens. I think the US dollar is likely to continue to do well, while there's so much uncertainty in relation to global trade.
Right. Can you also talk about the trade tariffs that are going on? It gets implemented tomorrow.
Well, yes, it's sort of a double whammy, a kind of one almost cancelling out the other in terms of magnitude and the timing. $34 billion on both sides of both U.S. goods into China and $34 billion of Chinese goods into the United States. Even the timings and the implementation of these tariffs is only a few hours apart. It seems to be a kind of almost a perfect definition of a tit-for-tat trade dispute, and for the time being, investors do still remain quite nervous in Asia. We saw a sell-off in Asia and in China and the Far East overnight. I think we are yet to see any signs that the trade dispute between Washington D.C. and Beijing has come to an end. And while this progress continues to play out the way it does, I think the likely outcome is that we're going to see additional pressure put on Chinese stocks. President Trump knows full well that the Chinese economy, as strong as it is by Western standards, but has been cooling by their own standards. I think President Trump knows full well that China is more likely to suffer more than the United States if both sides impose tariffs on each other.
Right, David. Thank you so much for taking out time for us. Always good to get perspective.